Now the Nifty closed absolutely flat at the 24,625 levels, and we saw some good gainers in trade today, even though for a predominant part of the day we spent the day in the red. In terms of the key gainers, Shriram Finance, Grasim, JSW Steel, Hindalco were the top gainers. Metals again continuing to shine. You've got TCS, Apollo Hospitals, HCL Tech, Sun Pharma being the top four losers on the index today. In terms of sectors, just very quickly speaking, you've got a good tilt in terms of advances. You had the likes of the metal index, of course, do well. I spoke about that. But you've got auto, realty. Some of those sectors came back to the fore. Auto obviously has done well, continues to do well. PSU banks were the other ones which actually outperformed. What didn't do so well? Well, it was banking, down around 0.25%. FMCG went back into the red, 0.25% lower. And you had defense and IT. Both of them spent a better part of the day in the red, along with pharma. So that was broadly the tilt. In terms of stocks, of course, it was very specific based on earnings, and that continued even today. But just the broader markets were relatively better placed. Both the Nifty mid-cap and the small-cap index did well. Some stocks which actually stood out in trade, you had the likes of Hindustan Copper up 8.5%, Ola Electric up 7.5%, Engineers India was up 7%, by the way. Go Digit, RR Cable, Hindustan Zinc, New India Assurance, Tenneco Clean Air, IPCA were just some of the others, all of which clocked gains of over 5% in the day of trade today. CE Infosystems, on the other hand, stock was down 8%. Some drag with regard to government orders typically happens in Q1 is what the management told us, but 8% lower on that stock. So Z Entertainment down 5%. You had GSK Pharma down 5% as well. Aegis Vopak, Bharati Hexa, Zydus Wellness, second straight day of losses on that one, 4.5% odd lower on our Zydus Wellness as well. So that was the tilt of the trade. In fact, let me go across to Darshita. She's here with the cues that you want to keep on your radar for tomorrow's day of trade. She sets us up for the day of trade of Thursday. Darshita here.
Right, here are the key cues to watch for August 6th, and starting off first with India. It's a weekly Sensex expiry, so expect some volatility in the markets. Now, globally, investors will keep an eye on the US initial jobless claims and the wholesale inventories for fresh signals on the health of the US economy. In Europe, the focus will be on the retail sales and the ECB economic bulletin for the clues on the growth and monetary policy. On the earnings front, globally, Nintendo and Warner Brothers Discovery will be in focus. Now, back home, the key earnings to watch include Trent, Britannia Industries, Hero MotoCorp, Lupin, Samvardhana Motherson, Premier Energies, and Crompton Greaves Consumer. Now, on the corporate side, Nazara Technologies and Premier Energies board will consider fundraising, while MV Electrosystems and Juniper Green Energy are set to make their stock market debut.
Okay, so you'll continue to see action there. We also had the likes of a Trent who will come out with numbers. We will have, in fact, the Trent numbers expected at some point of time on Thursday, and therefore you'll have that one in focus. You've seen a decent bounce from the lows on a Trent. And you also had broadly, even broader markets participate quite well today. I mean, we spoke a little bit about that, but let me quickly elaborate. The mid-cap index was up around 0.25%, small-cap index up around 0.7%, and you saw some good moves within that entire pack as well. Let me talk a little bit about auto, because that's the one which has really stood out. And you had the likes of a Bosch, which was up 4%, Sona BLW 3.5% higher, Ashok Leyland, Hero Moto, as well as Samvardhana Motherson and TVS Motors all gaining 2% plus. So the auto pack continues to be in fine fettle and continues to be in focus. Let me bring on board Rupak De, Senior Technical Analyst at LKP Securities, joining us. Rupak, great having you. First off, Rupak, the golden question, as has been the case for the last few days, what do you make of the moves post the CAS session today as well? And what impact will that have likely on trade on Thursday?
So the week started with a breakout led by positivity, then extended by a cash adjustment. So cash closing, if we look at the cash closings for the last 3 days, on first day it was 200 points higher than the actual closing. Then yesterday it was 150 points higher, and today it is just 50 points higher, than the actual closing. So it is coming down to normalization. So I think it will be normalized over the next few days when the volume increases. And so if we put this cash things aside and take the technical view, I find that Nifty has given a consolidation breakout. Then there has been a consolidation for the last 2 days, and I expect there is a high chance that the Nifty will give a breakout on the higher end. Resistance is there at 24,800. Once Nifty moves beyond 24,800, then there will be a significant rally in the market. Whereas on the lower end, support is placed at 24,400. Till the time we are above 24,400, sentiment is likely to remain positive.
Hi, Rupak. Meryl over here also joining in. That's certainly very good to hear that the volatility for sure is being seen tapering off, and those are the levels on the Nifty. How are you seeing the sectoral benchmark indices placed? What sectors should we look out for?
So the last few days, we are watching that the sector like metal, auto, then IT are doing great, and I think the momentum in this sector are likely to remain intact. Just the momentum in the banking space is missing for the last few days. Once they joins the party, we will see Nifty rallying towards 25,500.
Okay, Rupak, take a pause on this conversation because we've got Sajid joining in. He's here with the FNO snapshot. Let me go across. Sajid, take it away.
Thanks, Harsh, for that. The Nifty ending absolutely flat today, but look at what's happening in the Nifty futures towards the end of the cash session. The open interest is up nearly 5%, so there's shorts getting built in this market, and that's what we saw in the last 1 hour of trade as well. Hefty build-up of shorts, especially in some of the private sector banks. If you look at the Nifty Bank was down in at the end of the trade at nearly 1/3%, and the open interest built up there again 2.2%, and led by private banks like HDFC and ICICI. If you look at HDFC Bank, though there's a short build-up happening there. ICICI Bank, there's a short build-up happening, but across the board in PSU banks there has been some shorts getting covered and some long positions getting added there. Future gainers include stocks like. If you look at the call and put writing, you have a hectic activity which came in at 24,600 by put writers towards the end of trade there, but you still have a strong resistance building up because new addition open interest positions getting added at 24,700. The distribution chart is also going to give you a good trend of support building up of 24,500, but again there's a lot of call writing which is happening about 24,500, something what we saw yesterday as well in trade. In the futures gainers, you have future Hindustan Zinc, which is up nearly 5.8%. PNB Housing is up 4.4% or so. Sona BLW up over 4%, all seeing some long build up. Losers include Kalyan Jewelers, there's a long unwind happening. NHPC seeing a short build up, and Cummins seeing a short build up in today's trade. Open interest gainers include BSC. After the earnings, we are seeing nearly 25.9% jump in earnings. There's a short build up happening. MCX also seeing a 20% jump in open interest, short build up happening there. And Marico, after the earnings, which were decent and better, still seeing some short build up happening. Open interest losers include LIC. There's a short covering. Today was the last day for retailers to come and do it. The entire OFS has been oversubscribed. Amber saw a short covering, and Pidlight seeing a short covering. So going into the Thursday's trade, where now is a test for BSE, the Sensex options expiry come into play tomorrow, and tomorrow it will be important to see how some of the banking stocks are going to react to that expiry, which will happen on the BSE.
All right. Thank you, Sajid, for taking us through all of that, the FNO snapshot. But Rupak, let me bring you back. And, Trent is expected to put out its quarterly numbers tomorrow. Marico reported today, and the stock was up quite a lot. Where do you see the entire FMCG pack? What are the key levels that we should watch out when it comes to that?
So for the last few days, FMCG index is trading around its important moving averages. And I think there is no trend visible on the daily time frame. I expect the FMCG index to have a support at 49,000. Till the time it is above 49,000, the big kind of selling is not going to happen. Once the index falls below 49,000, then there might be some selling pressure across FMCG stocks.
Okay, so seeing some selling pressure across FMCG stocks. Rupak, can you help us with what are your top picks for tomorrow's trading session?
For tomorrow, I think there is a good breakout in Aurobindo Pharma. Stock is trading around 1614 and it is sustaining above its important moving average. So sentiment is looking very good, and I think it's a buy for a target of 1700. The stop loss would be placed at 1570. The another stock is Devyani. The stock is looking great. It has given a consolidation breakout, and it is likely to move towards 134 in the short term. So it's a buy around current market price with a stop loss of 120.
Rupak, thank you so much for coming in and speaking to us, giving us that perspective, and setting us up for the day of trade of Thursday. Let me now switch focus, get to the theme of the day, and essentially it's how arbitrage funds are, are getting impacted as a result of cash, and what that means if you're a holder of arbitrage funds, or if you have invested in them or wish to invest in them. And for that, let me bring on board Gaurik Shah. He's from Mirae Asset, and probably we get a perspective as to how this plays out. Gaurik, great having you. Let me first start off by understanding from you, last few days, what's been happening with regard to NAVs for arbitrage funds. Can you first give us the perspective, the big picture as to exactly what is happening? Let's start with that, and thereafter look at implications.
So basically what has happened is we have shifted from to a different process through which we were calculating the settlement price, right? Earlier we used to calculate the settlement daily settlement price based on the 30 minutes VWAP for all the stocks and all the futures. Now SEBI has come out with this new process wherein the stocks which are there part of the FNO for the cash segment, there'll be an auction for 15 minutes from 3:15 to 3:20 to 3:30, and there are certain processes around that. Now, because of that, these are initial days, right? This has been the third day, so the participants are still getting around on how this is going to work out, how are they going to participate, etc. And because of that, liquidity has been low, and the closing prices have seen volatility. Now, what happens is that because of that, the cash segment prices are quite different from what the futures prices are. So, what we have seen in arbitrage fund is that we have seen volatility in the daily NAV, but it does not impact the overall returns of an arbitrage fund. Okay, let's understand the mechanics behind it. Okay. So what happens? What is arbitrage fund? What is the strategy behind the arbitrage fund? We buy a stock and sell a futures, and there's a spread on that. Now, let's say we have already set up a trade at a certain spread. Now, in between, on a daily basis, there could be movement between both those things, cash price as well as the futures price. And because of that, there could be volatility on a daily, let's say MTM PNL, but both the prices are going to converge at the expiry. It doesn't change, right? So although you may see a daily
quick follow-up to that, but that will still benefit those who have liquidated their positions on that particular day, right? Because you'll have to give them the closing price benefit.
Yes, absolutely. So that does benefit the investors who have liquidated on that day, but that liquidation doesn't happen at 3:15, right? That liquidation request has to go before that. And there's no certainty that closing price will always be above the trading price.
Got that. Gaurav, I want to understand, was this purely just an accounting mark-to-market impact that we're seeing, or does this actually change the sort of opportunities that an arbitrage fund actually looks at?
No, the underlying thesis remains the same. Let's just take an example. There's a stock trading at 100 rupees and futures trading at 105 rupees at 3:15 p.m. Okay. Now that means that spread is 5 rupees. Now suppose in the closing auction, the cash price, which was at 100, actually comes out to be 110. And then futures still keeps on trading at 100 at 5 rupees. That means the position has gained for that particular closing NAV calculation 10 rupees. But next day morning, it's again going to come down at the same price. Okay, if next day morning that still prevails, then there's an opportunity for arbitrage fund for other guys. But typically in the next day morning, when it is both are tradable at the same time, they will converge. So although what we see on books or on accounting purposes is not tradable price.
Can
If
you?
it was tradable,
Right.
there are a lot of players in the market who will take advantage of that, and then that goes away.
Right. So this is an opportunity in the market then for arbitrage funds such as yours. Can you tell us how long this anomaly is expected to sustain in the markets?
I will say that is anyone's guess. Probably it has started coming down. First day there was a much higher impact. Then yesterday there was a lesser impact. Today this its impact is even lesser. But I will say it is not an opportunity in that sense for the arbitrage fund, because for the arbitrage funds, both of the instruments should be tradable at the same time. In this case, between 315 to 330, when the cash is in auction phase, we do not know what is going to be executed, what trade is going to go through. So we will not be able to trade that. So for us, the market closes at 315.
I'm very, very curious to know, were you as and other fund managers anticipating this delta to come through, such a large dislocation of sorts?
It's a chaotic thing. Right? It's a chaotic thing. And in the arbitrage fund, we should not be trading in this kind of chaos. Right? And there are other participants in the market, I'm sure, who would have benefited from this. But volumes also are not that great.
Not squaring off on every single day. So if essentially your NAV is repriced from 100 to say 101 in the last few minutes of the trading session, since you're not squaring off, how do you deal with that? Or in terms of a redemption, do you wait right till the fag end to square off? I mean, how do you play that?
No, we cannot trade. We cannot trade that. Obviously, the reason why this anomaly exists because we cannot trade that thing.
Correct.
If the trading is allowed in the normal market condition, let's say that spread which has become negative, if that exists, then we will unwind the position. But this anomaly exists because we cannot trade in that both the instrument at the same time in that time period.
So Gaurav, unless I'm getting something wrong here, how is it that you're playing that? Because the redemption will come in say at 12 noon. And the price will move from, or the NAV will move right at the fag end. So how do you play that?
So we'll trade till 315. We'll try to complete our position till 315. Otherwise, we are taking an market risk which we are not supposed to take.
Correct. Absolutely.
As an arbitrage fund, we are not supposed to take a market speculative position at any given point of time, right?
Gaurav, tell us then, for investors who are looking at these arbitrage funds as some sort of short-term or parking vehicles for their investments, what changes because of this, and should they now relook for a portfolio allocation? Like, what should they do now?
No, I think the investment thesis remains the same. over a medium term, that is from expiry to expiry, if we see the returns are not going to be impacted. It is the daily NAV which is not tradable, not predictable. So investors should not be looking at this daily NAV movement. So for example, day before yesterday, that was on Monday, most of the arbitrage fund on an average, I think, gave 0.5% return, which was mostly like a monthly return came in a single day. But that return is going to go away because the cash price, which were marked much higher, next day started coming down, or it came down right at the morning itself.
Does this, Gaurav, I kind of know your answer, but let me give this a shot anyway. Does this improve the way in which opportunities arise for you at arbitrage as managers of arbitrage funds?
Currently, no, I think it's the same thing. Instead, as I said earlier, for us, the market timing was 9:15 to 3:30. Now it has shortened from 9:15 to 3:15. Ideally, we should not be trading in that closing auction as an arbitrage fund, because if we do that, we do not, second leg going through is not always certain, right? And as an arbitrage fund, both the legs should be executed at the same time. And you cannot execute the two legs at the same time, then you should not be trading at that point of time.
I understand. And do you believe that AMFI or SEBI should reconsider, therefore, how arbitrage funds ought to operate, especially on that last leg? Given that, Gaurav, very, very clear question that if there is a spike and you need to kind of provide that added 1% odd to the investor who has redeemed, then do existing investors take a loss? Where does that go, therefore? Just trying to get a sense.
So it's a difficult question in that sense that yes, the person who has redeemed on that day does get an advantage, but that easily could have been reversed also. Say, for example, a person puts in redemption request at 12 o'clock. He doesn't know that this time the market is going to mark up or mark down. In last 3 days, we have seen a marked up in the closing auction, but it could easily have been marked down as well. Stocks which were trading at 100 rupees, which got marked at 105, could have been marked at 95 also. So person who is putting in redemption request doesn't know that he is going to be at the profit or a loss. So this anomaly is there because it's not a tradable anomaly. The moment it becomes tradable, this will go away.
So Gaurav, I mean, sorry, I'm going to push you on this one.
Sure.
Does that mean that existing holders, not the ones who have redeemed, say A, B, and C have redeemed, but do D to Z, who are the holders, therefore bear the loss for the differential that A to C have made in that last 10 minutes, or how does it work, therefore?
So, obviously, if they have invested, they got an advantage of it. So that much disadvantage will go to the existing investor. I mean, again, that is it's hard to predict, and it's going to be based on the market movements. I would say, I mean, it's not predictable, it's not tradable anomaly, and that is the case. And the investor who redeemed on that day does get an advantage. So just take an example, let's just say on Monday, that when the spike was there on 50 bips for the arbitrage fund as an overall basis, person who would have redeemed on Monday did get an advantage, right? But suppose tomorrow, person who redeems and the market marks down, then the person who has redeemed will be at disadvantage and the holders of the current fund will be at advantage.
Fair point, fair point. But last 3 days, the market has marked itself upwards, and therefore,
yes.
Therefore that
But
is the direction currently, unfortunately.
That's going to be the case going forward. It could
Right,
be easily the other around also.
Absolutely, absolutely.
The chaos is going to be on the days on the monthly expiry, on the rebalancing days of the indices. Those will be days where the real impact will come. And I think other funds will get impacted, and they will have to deal with how they are going to treat that away.
Gaurav, been a pleasure. Thank you so much for very
Thanks,
candidly speaking to us on this
Thanks a
topic
lot.
today.
Thanks a lot.
Thank you. Okay, what we'll do now is quickly get you an update on Trent because numbers expected on Thursday. Staying here with what to expect.
Well, yes, for Trent's Q1, we're not expecting to see anything great in terms of their earnings. In fact, we're expecting to see a very muted quarter this time around. Because remember, about a few weeks ago when the management came out with its Q1 operational update, the stock had taken a beating of 12% on that day alone on the back of the weakness that the management had indicated. According to this update, standalone revenue from operations is seen at 5,666 crores, which is an uptick of 18.5% on a year-on-year basis. Consensus estimates are also penciling in to see this number for the revenue metric. EBITDA, however, is expected to grow by 21%. Net profit is expected to expand by 18.5%. And margins, however, this time are seen to grow by 30 bips to 17.8% compared to 17.5%. The operating leverage and other operating costs may lead to this margin expansion. So this is something you want to watch out for. Now, if I take a look at the management's Q1 update in terms of what the stock count is, total stock count for the company stands at 1,312 with 301 stores from Westside alone. The estimate was that by now Westside would reach 304, so slightly soft over there. However, brilliant outperformance by Zudio in terms of store addition. Zudio stands at 982 stores, a beat versus the estimate of 976. So in terms of how many stores were opened in Q1, Westside just 1 store was added, so weak over there. And Zudio, 19 stores were added. The estimate was between 10 and 15, so this 19 stores addition looks very good over here. Remember, in its AGM a couple of months ago, the company has said that they're aiming for 50 Westside stores and 200 to 250 Zudio store additions in FY27. Well, Zudio looks on track. Westside has added just 1 store this quarter. So this 50 store addition that they've given for FY27, this casts a shadow on that. Lastly, in terms of some key expectations, we're expecting revenue per square foot to decline by 7% on a year-on-year basis. Revenue growth will lag area growth, and cannibalization of revenues for older stores could be seen by newer stores. So when the numbers do come out, watch out for any commentary on guidance for FY27, the store addition guidance, if they're tweaking that downwards for Westside especially, the triple SG growth outlook and demand outlook in metros and tier 1, 2 and 3 cities. So watch out for all of these factors, but yes, we're expecting to see a muted quarter for Trent.